You have probably said it to yourself, at least once. If I only started investing 5 years ago, I'd be rich by now. You scroll through stories of people who bought a Bitcoin at $1,000 or a Tesla before it became the world's most valuable car company. And you think, well, that ship has sailed. But here is the truth. You haven't missed the boat. In fact, you are standing right on the dock. And the best part? The ship hasn't even left yet. Because real investing, the kind that builds long-term wealth, is not about being early. It is about staying consistent. And the sooner you understood that, the sooner money starts working for you, not the other way around. So let's start with a simple question. Why do so many people believe they are too late? It's because we have been taught to equate investing with luck and timing. We only hear about the big wins, the person who bought at the bottom and sold at the top. But we never hear about the quiet investor who started small, stayed patient, and retired free. So today, I want to decode this myth once and for all. And I want you to finish this video knowing exactly this 2025 might actually be the best time in history to start investing, no matter your age, your income, or your background. So let's start with something everyone forgets. Time. It is your greatest ally. If you invested $100 for a month for the past 10 years in a simple market index like the S&P 500, you would have roughly $20,000. Not bad, right? But here is the part most people overlook. If you start today with that same $100 a month and keep doing it for 30 years without trading, without guessing, just staying consistent, you could end up with over $170,000 even with the modest return. That's not luck, that's just math. And it's proof that time is a better investor than any of us. You see, compound growth is slow in the beginning. It grows, but after a few years, it starts to sprint. It's like planting a tree. At first, you barely notice it's growing, but give it time and one day it's giving shade, fruit, shelter, all because you had the courage to plant when it looked small. So when people say, it's too late, what they really mean is, I wish I would have started earlier. The good news, that feeling can end today, because every single day you delay, your future self pays the price. But every single day you invest, your future self gets stronger. Now, let's talk about why now. This very moment is an incredible time to begin. Technology has made investing simpler than ever. You no longer need a broker in a suit or $1,000 to get started. You can open an account on your phone in minutes and buy a fraction of a share. Literally, $5 can make you a part owner of Apple, Google, or any major company around the world. Sure, access to information has exploded. YouTube podcasts, online courses, everything you need to learn is out here for free. Our parents had to depend on gatekeepers and advisors. We have the internet. Ignorance is no longer an excuse. And finally, for those of us in emerging markets, this is our golden window. As our economies modernize, as our capital markets grow, and a lot of platforms launch, being early here does not mean being rich tomorrow. It means being prepared for the next decade because the wealth being built in Africa, Asia, and other developing markets today will define the next generation of investors. But let's get real for a second. Most people don't start investing, not because they don't know how, but because they're scared. Scared of losing money, scared of making mistakes, scared of being, judged for trying something new. If that's you, I get it. Fear is real, but let me tell you something that changed my perspective forever. The biggest loss is not losing money in the market. It is losing time outside of it. Because the market always recovers. It always has. But time, once it is gone, it's gone forever. When you finally realize that the cost of waiting is higher than the cost of learning something, it clicks. You stop saying someday and starting today. So let me give you a story that captured this perfectly. There were two friends, let's call them Sarah and Daniel. Sarah started investing at age 25. She invested just $100 a month for 10 years, then stopped. Daniel, on the other hand, waited until he was 35, like me, to start, but kept investing that same $100 a month until he was 65. Because who ended up with more money? Sarah did. Even though she invested for only 10 years, her money had more time to grow. Daniel invested 3 times more money, but he could never catch up. That's the power of compounding. It rewards the early, it forgives the consistent, and it punishes the hesitant. Now, I know some of you might say, but markets crash. What if I start now and lose money? That's a fair question. But remember, short-term dips don't destroy long-term investors. In 2008, the market fell over 50%. In 2020, it fell over 30%. But in both cases, those who held on, those who stayed consistent, ended up doubling or tripling their money over the next few years. Why? Because the market is not a slot machine. It is a mirror of human progress, and the human progress, despite all its chaos, always moves forward. Every crash, every crisis, every panic, it is a temporary thing. But growth, innovation, and recovery, they're permanent. So, if you're listening to this and thinking, maybe I'll wait for the next big dip, then I'll invest, let me stop you right there. That's the same logic people used 20 years ago. And most of them are still waiting. You don't need to time the market. You need time in the market. Even the world's best investors, people like Warren Buffett, admit they cannot predict the future, but they do know only one thing. Owning a piece of productive business over long periods has never failed to build wealth. The trick is not to outsmart the market, it is to outlast your emotions. So, what does starting look like for you? Maybe it's opening your first investment account. Maybe it's setting up automatic deposits, even just $20 or $50 a month. Maybe it's learning about index funds or government bonds. Or maybe it's just making the decision that I am an investor now. Because mindset comes before money. Identity comes before action. If you see yourself as an investor, you'll naturally start acting like one. You'll spend less on noise and more on growth. And that is where everything begins to shift. Here is something that helped me visualize this. Imagine your future self, 5, 10, 20 years from now. You are living the life you dream of, calm, secure, free. What would you say to you today? You wouldn't say, I wish you waited until the economy was perfect. You'd say, thank you for starting, even when it felt uncertain, because there is never a perfect moment to invest. There is only the moment you decide to begin. So no, you are not too late. You are not behind. You're not missing out. You're right on time. The real question is whether you will use today as the day you finally start. Because 5 years from now, you will look back at this very moment and you will either say, I'm glad I did, or I wish I had. Make it the first one. Start small, stay consistent, and let time do what time always does. Turn patience into profit. In the next episode, we are going to decode the most basic question in all of investing. What is a stock? Because understanding that one simple concept will change how you see money forever. This is Decode Finance, where money finally makes sense. See you in the next class. Bye-bye.